We need to talk, we get it, folks. Climate change is a real bummer. It's like that one friend who always shows up uninvited and drinks all your beer. But instead of just stealing your beverages, it's messing with our planet. And guess what? We're all contributing to the problem. Every time we drive a car, crank up the AC, or order that suspiciously cheap t-shirt online, we're adding to our carbon footprint. Now you might be thinking, John, what the hell is a carbon footprint? Well, think of it as the environmental equivalent of your internet browsing history. It's a record of all the greenhouse gases you're responsible for releasing into the atmosphere. And let's just say some of us need to clear our browser history, like yesterday. The good news is that, unlike your questionable online activities, there's actually something we can do about our carbon footprint. But first, we need to measure it. That's where carbon accounting comes in. It's like stepping on the scale after a month of eating nothing but pizza and ice cream. Except instead of judging your questionable life choices, it helps you understand your impact on the planet. Before we dive into the nitty-gritty of carbon accounting, let's talk about greenhouse gases. These gases, with names like carbon dioxide, methane, and nitrous oxide, are the main culprits behind climate change. They're like that friend who shows up to a party, cranks the music way too loud, and spills beer on the rug. They create a mess and no one wants to take responsibility. Here's the deal. Greenhouse gases trap heat from the sun. It's like wrapping the Earth in a giant invisible electric blanket. A little bit of warming is fine. It's what keeps our planet habitable. But too much, and we're talking about some seriously unpleasant side effects like rising sea levels, extreme weather events, and a global shortage of decent white wine, a true tragedy. Now back to carbon accounting. The goal is to figure out how much each of us is contributing to this greenhouse gas party foul. Because once we know who's bringing the heat, literally, we can start to do something about it. So let's break down the different ways to measure our carbon sins, shall we? All right, folks, buckle up. It's time to talk numbers. Carbon accounting is the process of measuring and tracking an organization's greenhouse gas emissions. Think of it as the financial audit of the environmental world. It's not exactly the most thrilling way to spend an afternoon, but it's about as much fun as accounting gets. Just like there are different ways to track your spending, some more meticulous than others, there are different methods for calculating carbon emissions. We've got the spend-based method, the activity-based method, and the hybrid method, which, spoiler alert, is a combination of the first two. Each method has its own set of pros and cons, which we'll delve into later. But the important thing to remember is that accurate carbon accounting is crucial for understanding our environmental impact and, more importantly, for doing something about it. Because ignorance might be bliss, but it's not going to save the planet. Let's start with the simplest method, shall we? Spend-based carbon accounting is like trying to estimate your grocery bill by looking at your bank statements. You might have a general idea of how much you spent on food, but you're probably missing some key details. Like that late-night pizza binge you'd rather forget. Here's how it works. You take the financial value of your purchases, think electricity, fuel, materials, and multiply it by an emission factor. Emission factors are like pre-calculated carbon footprints for common goods and services. Imagine a label on a gallon of gasoline that says, "Congratulations, you've just purchased 20 pounds of carbon dioxide." While this method is relatively easy and inexpensive, it's not exactly the most accurate. It's like trying to judge a book by its cover. You might get the gist, but you're bound to miss some of the nuances. Section 5. Activity-based carbon accounting. For when you need to know exactly who brought what snacks. Now, if the spend-based method is like glancing at your bank statement, activity-based carbon accounting is like meticulously tracking every single calorie you consume. It's detailed, it's comprehensive, and it might make you question your life choices. This method involves collecting data on specific activities that generate emissions. Think fuel consumption, transportation distances, and waste generation. It's like keeping a diary of your carbon sins, except instead of confessing to a priest, you're confessing to a spreadsheet. While this method is undoubtedly more accurate, it's also more resource-intensive. It's like trying to organize your entire music collection by genre, artist, and year of release. It's a noble pursuit, but it might take a while. Section 6. Hybrid carbon accounting, the best of both worlds, hopefully. As you may have guessed, the hybrid method is a combination of spend-based and activity-based accounting. It's like ordering a half pepperoni, half cheese pizza because you can't decide which topping you want. Or maybe you just like compromise. Who are we to judge? This approach involves using activity-based data for key emission sources where precise information is readily available. For the rest, it relies on spend-based estimations. It's about finding a balance between accuracy and practicality, because let's face it, no one has time to measure every single gram of carbon dioxide they exhale. Section 7. Case Study. When a coffee company tried to calculate its caffeine high. Let's put these methods into practice, shall we? Imagine a hip, trendy coffee company that wants to reduce its environmental impact. They've got ethically sourced beans, biodegradable cups, and a logo that screams, "We love the planet." But how do they measure the carbon footprint of their caffeine addiction? They could use the spend-based method and look at their energy bills, transportation costs, and the amount of coffee they purchase. Or they could go full-on environmental warrior and use the activity-based method, tracking the energy used to roast their beans, the distance their coffee travels from farm to cup, and even the emissions generated by their customers' morning commutes. Of course, there's always the hybrid approach, which would allow them to focus on the most significant emission sources while still getting a decent overall picture. The point is, there's no one-size-fits-all solution. The best approach depends on the specific company and its sustainability goals. Section 8. Spend-based versus activity-based. It's like choosing between a hammer and a scalpel. Choosing between spend-based and activity-based carbon accounting is like choosing the right tool for the job. If you need to hang a picture, a hammer will do just fine. But if you're performing open-heart surgery, you're going to want a scalpel. The spend-based method is like the hammer. It's simple, straightforward, and good for a rough estimate. The activity-based method, on the other hand, is like the scalpel. It's precise, detailed, and best for when you need accurate information. Ultimately, the best approach depends on your needs and resources. If you're just starting out with carbon accounting, the spend-based method is a good place to begin. But as you get more serious about sustainability, you'll probably want to transition to a more accurate method, like the activity-based or hybrid approach. Section 9. The importance of accurate carbon accounting, or how to avoid an environmental PR nightmare. In today's world, where consumers are increasingly conscious of their environmental impact, accurate carbon accounting is no longer optional, it's essential. It's like wearing deodorant. You might be able to get away with skipping it occasionally, but eventually people are going to notice. Accurate carbon accounting allows companies to set realistic emission reduction targets, track their progress, and communicate their sustainability efforts to stakeholders. It's about being transparent, accountable, and dare we say responsible. Because let's face it, no one wants to be that company that gets caught greenwashing, pretending to be environmentally friendly while secretly emitting more greenhouse gases than a herd of methane-loving cows. That's not a good look for anyone. Section 10. Net Zero. Making carbon accounting less taxing than doing your actual taxes. Navigating the world of carbon accounting can be about as much fun as doing your taxes. But fear not, dear reader, because there are tools out there to make the process less painful. Enter Net Zero, the carbon management platform that's here to simplify your life. Net Zero is like the TurboTax of carbon accounting. It takes all the complicated stuff and makes it user-friendly. It supports multiple accounting methods, offers custom emission factors, and provides a holistic view of your carbon footprint. It's like having a personal carbon accountant on call 24/7, except without the awkward small talk and exorbitant fees. So, if you're ready to take control of your carbon footprint and make a positive impact on the planet, Net Zero is here to help. Because saving the world shouldn't be as complicated as rocket science or, accounting.